Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, April 5th, right after the markets close. Well, Wall Street's main stock indexes rose today after stronger than expected March jobs data pointed to resilience in the labor market, even as it meant the Federal Reserve would be in no rush to cut interest rates. The unemployment rate stood at 3.8% compared with expectations that it would remain steady at 3.9%. While average wages earned rose 0.3% on a monthly basis in line with estimates. And on that note, let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to first look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY closed, as you can see, at 500, really close to the 20-day, at $518.43, just below, and here's the all-time market closing high, just below the March 27th all-time closing high, and that came in at $523.17. Now, we know that the SPY, I should call it, has been trading in a picture-perfect uptrend ever since its October intraday lows, and I know it kind of fell off the screen here. But the intraday lows in October were down at right around $409. It bounced up from there when it looks like interest rates were going to move down a little bit. The SPY rose up very quickly, jumped over the 200-day moving average, the black line, the 20-day moving average, the red line, and the 50-day moving average, the green line. These were all kind of inverted, jumped up and over those, up into a glorious uptrend through November, through December, January, February. It looked like no end could come, and the 20-day moving average acted like a very a perfect staircase for the 20-day for the price, I should say, to move up, the 20-day moving average, and it stayed above this line. The SPY stayed above this line going into 6 months now. It stayed above this line right until Thursday's low of this week. Now, Thursday's closing low of this week was at $513.07. And we can see that the 20-day moving average is coming in here at $517.48. So it's all kind of clustered in here. Price, the 20-day moving average, Thursday's low, which was kind of an uh-oh, but it bounced back up and gapped up this morning, Friday. And we're still above the 50-day moving average, which is now coming in at $506.93. Now, the SPY broke the 20-day moving average again for the first time in about 6 months on Thursday of this week, and it did so pretty decidedly. But again, it popped up Friday morning, and so what we want as we look into this coming week, we want the SPY at least, because you know the definition of an uptrend is higher lows and higher highs, and so far it's done that. But we want it to hold at least 508 here. Now, that would be support from back in March, price support, and that support goes back a little ways. So that's kind of the first level of support here. Again, the 20-day moving average is coming in at $517. We closed today at $518 and change. So we're cutting it pretty close here. In order to remain bullish in the coming week, we're going to keep an eye on the SPY's ability to remain in the uptrend, okay? And particularly its ability to remain above, hopefully, the 20-day and more hopefully the 50-day moving average, again coming in at, we'll call it 507 to make it easy. So this needs to happen, okay? Okay, so let's go on to our next chart. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. The Invesco Qs follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market. This is the ETF where in momentum stocks reign, the big guys like NVIDIA, Meta, Microsoft, and so forth. Now, the QQQ, if you look with me over here, the Q's closed today at $440.47, just a few cents below the 20-day moving average and sitting on top of its 50-day moving average. Notice how the moving averages are closing in on each other. We don't want that. We don't want the 20-day to come down and cross over the 50-day because that, of course, means that price is moving lower. We've had some pretty substantial volume in the last couple of weeks. So hopefully these moving averages, hopefully price moves up. It would have to move up again over the 20-day moving average coming in now at $441.31. So it would have to move up and over that moving average and up over 442 to start moving higher again. Now we know that like the SPY, the Invesco QQQ had its October lows. The October lows for the Qs came in at about $342, and then like the Qs, they jumped up, although the Qs didn't have to go below the 200-day. I'm sorry you can't see it on this screen, but in order to take everything in, this is how I had to do it. So the Qs had their October lows at about $342. They jumped there as interest rates looked like they were going to start to lower. Obviously, tech stocks love that, so it bounced up and created a strong stairway on the 20-day moving average. Price moved above the 20-day. The 50-day bounced up at quite a premium to the 20-day in November, then came back. Now, it created a strong stairway like the 20-day did, just like it did with the SPY, but with the exception of a few dips here. We see a dip here that happened in January, another little dip in February. It came below the 20-day, but popped up within 2 or 3 days back above it again. A little quick dip here in March. And that's to be expected because big cap tech stocks are typically much more volatile than the calmer groups in the SPY, like the utilities and the staples. Healthcare stocks even are much, we're going to say, calmer on a general basis than momentum and big tech is. So usually there's a little more volatility in the Qs than there is in the SPY. Now, as we head into first quarter earnings season, you want to keep an eye on the QQQ. It is, again, sitting here on the 50-day moving average. It had its day down on Thursday of this week, but it's sitting on the 50-day moving average below the 20-day, just below it. The 20-day is coming in at $441.31, and again, the Qs closed today just beneath the 20-day, probably not enough to count, at $440.47. And a note you do want to make is that the 50-day moving average is coming in at $436.07. Let's just call it 436 here. That is a number we want to keep an eye on, and we can see that there's support down here right about 432. So we want to keep, if it does move below the 50-day, we do want to hold this line at 432, even 430. And again, we want it to stay above Thursday's low, which came in at 435. Okay, so fingers crossed. We'll go on to we'll go into the coming week with some bullishness. Still in this market, it's been wonderful. Our final chart today is a daily chart of the sector Spider Utilities ETF, the XLU. Top 30, there are 30 holdings in it. Excuse me, some of the top holdings include NextEra Energy, Southern Company, Duke Energy, Constellation Energy Group, and so forth. Now I'm looking at the XLU because if the market does slow down a bit here, and it does look like, and rightly so, it makes sense, it does look like we may get a little, what do they want to call it now, broadening out in the market. Maybe we get a short pull into the rest stop here. If so, the XLU is usually a place that traders escape to. So I want something that will pose a little less risk. Now, if we look left on the chart here, we can see that the XLU actually had a very quick double bottom here, real quick, and actually it came down to a quick double bottom here at about 55. But it started up, the XLU started up a lot sooner, a couple of weeks sooner than the SPY and even the Qs did right here. Why is that? Because when interest rates look like they're going to come down, a lot of traders want to jump into utility stocks because they have such good dividends. They pay such good dividends. So basically that's interest. So traders jumped into this early who wanted to get, because utilities were having a rough time. So again, we had a real quick double bottom here at about 55 in October. Then utilities, which you normally think of as very calm, did a U-turn here, jumped up over its 20-day moving average, dipped a little, then moved back up, jumped over the 20-day again up in November here, then dropped down a little bit, then marched up its 20-day moving average to its December high up here, this December high at $66.70. Whoever sees utilities move this hard and fast? You don't, but that's what happened. Then it did a quick dive back down here, down to 62, then back up again on February 1st. So it did a quick dive to 62, then back up again to 65 on February 1st, right here, back under its moving averages, basically. Then it did 62, then back up to 65 on February 1st. Then down to February lows at 69. Then it started climbing up its 20-day moving average here up to where it closed today. I'm looking at too many things at once. Then it started moving up here. After this February low, it started moving up again over its 20-day moving average and walked up the 20-day moving average to where it closed today at $65.16, or what is it? Yeah, 16 cents. So I like this move here. I know that if interest rates go lower, the XLU is going to probably do nicely. It is trading up here right atop its 20-day moving average. Beneath it is the 200-day moving average coming in at 62.85 and the 50-day moving average coming in at 62.56. So if in the coming week the XLU can stay above its 250-day moving average, and I'm just going to call this number 62.50 to make it easy. So if it can stay above 62.50, and actually my hope is it comes down a little bit here and I get it a little lower, but maybe that won't work. I am going to, if it stays above 62.50, I'm going to add a small position of the XLU to my trading portfolio with a stop down here at 62.25. Now, if and when it can rise above these past highs here, and I'm going to call it $67, if and when the XLU can rise above $67, I will add to my position and my stop will be a trailing stop. So you may want to keep an eye on the XLU in the coming week. Now, if you'd like to become a more profitable trader, this is a great time to check out my online training programs. From our ever popular 7 Steps to Successful Trading, to How to Swing Trade Successfully, a real favorite, Trade the Trend to Profits, one of my favorites, How to Read Charts, 3 Winning Setups, great for novices and short-term traders, and Bottom Fish Like a Pro, which I always love to do, and there's more. You will discover how you can earn more money trading quickly and easily. These programs are timeless, and to make them more accessible to everyone, we've just lowered the prices. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.